Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar commenced the week with a 1% increase against the dollar index, briefly reaching mid-January highs. However, unlike gold, it did not achieve a breakout. Instead, the dollar depreciated in the first half of the week, swiftly returning to its 50-day moving average. U.S. labor market data provided mixed signals, showing an unexpectedly weak rise in new jobs, yet a decline in the unemployment rate and a continued 4.1% year-over-year growth rate in average hourly earnings. We are closely monitoring the dollar as its challenges in appreciating this year may indicate an impending reversal. Nevertheless, it is too early to confirm a break in the uptrend, since the DXY has not breached the 50-day moving average and remains within a typical correction. Furthermore, fundamental factors such as Federal Reserve policy and robust macroeconomic data continue to support the U.S. currency. Gold prices reached all-time highs at the end of last month and have continued to climb steadily into the first week of February. This marks the sixth consecutive bullish weekly candle, with a 2.5% gain over the past 7 days. This performance is noteworthy, especially given the fluctuations in most other markets. From a technical perspective, gold is starting a Fibonacci extension pattern. The global rally commenced in October 2023, following initial signals from the Federal Reserve indicating an easing of monetary policy and a subsequent slowdown in the pace of rate hikes. Between October and November 2024, after appreciating by 55% to reach the $2,790 level, gold experienced significant profit-taking, resulting in a pullback to $2,550, which represents 76.4% of the initial rally. This was followed by several weeks of intense trading between bullish and bearish market participants. By the end of December, steady buying momentum had returned to the gold market. A move above $2,800 in late January has led to discussions about the potential onset of a new global growth wave. If this trend continues, the price of gold may potentially reach the $3,400 per troy ounce area between August and October of this year. In contrast, silver remains more subdued, currently sitting 7% below its highs from October last year. However, it has shown strong performance over the past week. Should gold continue its upward trajectory, silver is expected to rise at a faster pace, thereby recovering lost ground. The cryptocurrency market has decreased by more than 11% over the past 7 days. The primary impact for bearish investors occurred over the weekend and on Monday, following the imposition of U.S. tariffs against Canada, Mexico, and China. Despite an initial rally, the market continued its decline, reaching a value of $3.15 trillion, which represents a dip below the previous cyclical low. A similar pattern was observed in March of last year, when the market experienced a prolonged and somewhat alarming sideways slump. The crypto market sentiment indices accurately reflected this mood, demonstrating a shift back into fear territory by the end of the week. Current conditions are relatively favorable for Bitcoin. Although the leading cryptocurrency has also declined, it has done so at a slower rate compared to the overall market, losing slightly more than 6% over the 7-day period. Bitcoin's price has fallen below $97,000 and is now trading beneath its 50-day moving average. Consolidation below this level indicates a potential disruption of the uptrend, with a pullback to the 200-day moving average near $80,000, considered a possible target. In the new week, Fed Chairman Jerome Powell will address Congress on Tuesday and the House of Representatives on Wednesday. The prepared speech will be the same in both cases, but all attention will be focused on his answers to lawmakers' questions and the outlook for monetary policy. The key economic news will be the release of U.S. consumer inflation data on Wednesday, the 12th of February. It has been accelerating since September and reached 2.9% in December. Further acceleration is a strong positive for the dollar as it pushes back the timing of a rate cut. Don't miss the UK's monthly and quarterly GDP estimates on Thursday, February 13th. The Bank of England has just lowered its growth forecast for this year to 0.75%, which is expected to be weak and negative for the pound. On Friday, the 14th, U.S. retail sales are due to be released. Sales excluding autos have been rising every month since last May. The big question is whether this trend will be broken. Stay tuned to Pro News Weekly for more updates on global markets. Like, share, and subscribe.